And as always, we're going to be looking for accurate context, good risk management, and always exercising good patience.
Everybody who's traded has gone through periods of time where their strategy hasn't worked.
Where if not a hard stop, you should reevaluate the trades you're in based on time.
That's what we're here for, is to put ourselves in the best success. A trading routine does that, builds that habit, lets you know what to work on, what to reflect on, and what to improve on the next day.
Good morning and welcome to the market forecast for Tuesday, October the 25th, 2022. My name is John Hoagland. Thanks for trusting me with your time this morning. As always, our focus is on seeking accurate context, which can be difficult. Always thinking about risk management, which is the first thing we should be thinking about, and always trying to remain patient in our trading. This morning, economic numbers, 8 o'clock Central. In just a little while here, we're going to have the Case-Shiller and FHFA housing price indexes. That's one that we're going to be keeping an eye on, of course, and we know the markets are going to be. 9 o'clock, we have consumer confidence as well as the Richmond Fed Manufacturing Index. U.S. stocks set to open a little bit lower. Actually, the NASDAQ presenting a little bit stronger, and probably because of some of the expectations of some of the big earnings coming out later on this afternoon. Markets are still, of course, awaiting housing numbers, confidence numbers, and those tech earnings after the close today. Google and Microsoft reporting after the close, I should say. Early today, we had Coca-Cola beating on both mixed numbers from both UPS and GE, and good numbers from GM, Google, Microsoft, Visa, and Texas Instruments, just a few of the bigger ones due out after the close. Apparently, the head of the IEA, the International Energy Association, has stated that the world is in its first truly global energy crisis. It's not sounding very good there. Cites tightening liquid natural gas markets as well as cutbacks in production by major oil producers. So market's not necessarily responding all that much to those numbers, and we have some I guess shorter time frames solutions for some of this, but in the longer time frame, we've really got to try and get things figured out as far as our energy is concerned. The VIX this morning is down slightly, kind of amazing, but down a little bit at 29.82. Dollar index continuing to slide lower, 111.99. And the yield on the 10-year actually off a little bit this morning, 4.17%. As always, make sure you hit the lucky like button. Share, comment, question, feedback, heckling, and love are always welcome here on the Market Forecast Recap and everything we do. Subscribe to our YouTube channel so you can get notifications when we do go live. Today we have the early session of Make Hoag Money right after the market forecast here. Looking forward to seeing what we can find. We had our first evening session, closing session of Make Hoag Money. We made a little bit of dough yesterday, which was always nice, and I think it was a very successful first closing Make Hoag Money. So we got the opening Make Hoag Money today. We also have the coach's playbook today, and of course the recap at the end of the day. So looking forward to seeing you throughout the day today. Good to see everybody as always. Dark Heaven, first one in the room, you win the prize. NASDAQ, Scott saw and he conquered. Theo, pleasure to see you. The rooster crowing early this morning at just about dawn here. Seems the light is coming later and later in the mornings. We are coming into winter. Shaw Cunningham, good morning. Serenity Trader, Caprice 101. Bill, Scarlet Arachnid, good to see you. Dimitar, Orion, good to see you. Rob T, Jules, Jerry is awake, and I hope John is too. Joel MB, Dowitzer, George, good morning. Lacey's on the forbidden couch. Heute ist das Wetter. Das Wetter ist schlecht. We've got a little bit of rain here. George, JD, good to see you. John Doherty, always good to see my good friend John Doherty here. Jerry is awake. Passed the combine yesterday. Now some time off to get the chip off my shoulder. Good job, Jerry is awake. Glad to hear it. Always love to hear about success from our traders. Haggle Matters, good morning. Sarah Hall, good morning. Prayers and love to you. Nice job, Jerry. JD is saying, Danny Ireland, good morning from the great state of Wyoming. I love the great state of Wyoming, especially the western part of Wyoming. Good morning, my guy Vince. Jerry saying thanks to everybody. Rob Crust, good to see you. Kevin, good to see you. And Unicus with his quote for the day. The keys to patience are acceptance and faith. Accept things as they are and look realistically at the world around you. Have faith in yourself and in the direction you have chosen. Quoted by R. Marston. Another fantastic quote, Unicus. Accepting what happens. A big part of being patient, right? Good morning, Dan Trader, Kyle, Kevin, Sean, Doji Candle, there's a good name. Nice to see you. Thanks for saying hello this morning. JNR, Zerain, Marcelo, Terry, Terrence, Jason, Andres, good morning. Khalid from Paris. Wee. Rooster, there he is. There's the cock-a-doodle-doo. It is dawn. Morning, Casey, Trading Research, Kevin Laffey. Asking Jerry is awake, what platform did he use? Nice job from NASDAQ talking to Jerry. Good job passing the trading combine. Combine up. Swing trading combine up 363 on your way to 1,000. Good job, NASDAQ. Keep up the good work. Umar Ali, good morning. I used to know a guy named Umar Ali. I wonder if that's the same guy. Did you work on the trading floor, Omar? I know it was a different spelling. Sarah Hall congratulating, saying beautiful to Unicus, of course, David. And Slim Jim. Good morning, Slim Jim. I can always use a Slim Jim in the morning. So it's always, again, a pleasure to see everybody. We're going to get into the charts pretty quickly here so we can get ready for the Make Hogue money this morning, 8:20. So we're going to jump in to the charts. Let me get things all set up for us. Okay, Omar, you've got a name doppelganger out there. Stephen, good morning. All right, you're all right here. We all set. All right, let's start with the daily in the E-mini S&Ps. And see what we see. So yesterday we had a breakout to the upside. Was it a good substantial breakout? Was there good momentum? We really just tested to the swing highs up here. We did add 1,600 in open interest, and that to me is a little bit anemic for a move of this magnitude, or what the magnitude of this move could have been. This is a weekly kickoff breakout, and it did break out, and it continued, but it didn't bring in a lot of new business. It brought in new business, just not a lot. Volume was relatively low in futures as well as New York. So this 38.20 swing high, everybody's been kind of focusing on this swing high, has kind of topped off and is one extreme of the areas that I'll be looking for opportunities today. We are waiting for economic information. How powerful that economic information is, of course, something we cannot know. So we're going to just depend on trading what we see this morning. We're going to see these numbers coming out here in just about 5 minutes. We'll see if we can't come back and take a look and see if there's any response in the E-mini S&Ps. Probably going to be a little bit economically sensitive. Don't forget we have the GDP preliminary on Thursday, FOMC next Wednesday, so we may be falling into a little bit of hurry up and wait type of situations. Here's the 30. I'm going to take the VWAP bands off. It just seems to complicate things. So here's our move to the upside. There was some really good question as to whether we were going to reject or accept above this level. We talked about last week's high, weekly kickoff high, a naked point of control that I still have to take off because we have checked it in regular trading hours. This was an important level here. It's still an important level. We've got settlement right here, 38.09 quarter. Added some open interest, nothing tremendous, rather anemic, I think, for the situation that the market is in. Are we holding any overnight inventory? Here's where we opened. Here's where we are now. Not necessarily any big overnight inventory with which to worry about, and we're opening in range and in value, which says to me, let's try and stay patient. The extremes of where I'm going to be looking for opportunities today are, in essence, weekly kickoff low, 37.78. Even, and 38.20, the high from yesterday and this important inflection level. Anything in the middle is going to be shorter time frame activity, I think. So I'm going to try and stay patient, especially in value, in range. No real change to the perception of value of the S&P at this time. Again, we're looking for new data to come out here in just about 3 minutes. Let's take a look at crude oil and then maybe get back and watch what happens at 8 o'clock here with in the NASDAQ. Crude oil. Open interest remains relatively steady over time. No big jumps, no big losses. The volume yesterday, was all right. We did add 2,000 in open interest, but we're still like a piece of rice between two chopsticks. We just can't seem to break out of this coiling activity that we've got going on here, and it will happen. And in that same breath, you have the trend lines to break out of. You've got last week's high to break out of. You got weekly kickoff high to deal with above. Down below, you've got this trend line, you've got weekly kickoff low, you've got last week's low, all different areas and visuals for traders to focus on and bring price to. We're not there yet. Here's the 30. All right, overnight inventory, we were a little short. I'd say we've recently, just before the open, removed most of those overnight shorts. We've taken price right back to settlement. We are not going to be having a gap. This is in the wrong spot here. There we go. Now we've got them. So the market has really just been holding between these two lines. And so that puts me in a situation where I've got to trade balance. In other words, fading the extremes against these lines. And then upon acceptance outside these lines, going with a move outside of them, because that's just what we do when we have range-bound activity. This is correct. We do have a naked point of control down below, which we checked the overnight before last, and still not checked in regular trading hours. Above, we've got another naked point of control there. So if we do break out either direction, the first stop for me is going to be at these naked points of control. Naked points of control are visuals. They are comfort levels. They are areas where the market expended a lot of energy and spent a lot of time. These points of control are comfortable levels. Traders love to trade in comfortable areas. Not me. Not me. I like to trade where it's uncomfortable, where the market is not going to be spending a lot of time. So the market returns to those comfortable levels and often does not spend a lot of time upon revisiting those. That's why we're always focusing on those those naked points of control, unrechecked points of control. But I'm looking for these points of control to be checked in regular trading hours, not in overnight trading hours. The participants aren't there, the major participants. So we're going to stay patient. We're in range, relatively close to value. I'm going to be looking for opportunities at the extremes of these trend lines. Upon acceptance, we go with. Upon failure, we fade. Let's check the let's check the NASDAQ. We've got our numbers coming out here directly. Let's see what we've got. All right. So the NASDAQ is presenting as stronger than the others today. All right, we've got the housing price index. All of them, well, the year over year FHFA year over year is lower. Month over month is a little bit lower. All of them, I think, are not looking good. The case Shiller lower than expected on all three lines here. So housing still continuing to appear to slow. We don't have that's 9 o'clock Central, 9 o'clock Eastern, 8 o'clock Central there, Joel MB. So they just came out and not looking all together that good. We do have the consumer confidence number due out in an hour at 9 o'clock. And that's along with the Richmond Fed manufacturing, which shouldn't be all that impactful. So let's get back to the charts here. Volume was weak again yesterday, but higher open interest. We only added 1,600 in the S&Ps. We added 1,800 in the NASDAQ, which is presenting as perhaps a more healthy upside auction, and really just kind of above last week's high. We're waiting a lot of tech earnings today, of course. Last week's high, was it supportive last night? It was within a buck or two. Seems as though it was supportive last night. Here's what it looked like on the 30. Very narrow range last night. Here's our support along last week's high. We're just kind of holding here. No overnight inventory, no runs, no hits, no errors, nobody left on base, hanging around just waiting for new information. This market is really kind of keeping me on my heels as to looking for early opportunity here, especially in the NASDAQ because of the narrow range. We've got the high from yesterday. Looks like an interesting opportunity. We've got our overnight low. Anything in the middle of this, I don't even want to participate. I'm going to be using overnight high, yesterday's high, and the last week's high are the overnight low as reference. Just because I can limit risk in and around those levels. Not looking at too many big opportunities so far here yet in the NASDAQ this morning. This really kind of puts me in a pickle. Gold. So the Friday rally loses open interest. Yesterday, we look higher and we push back on higher open interest, adding approximately 2,400 in open interest. Friday's rally was hollow. Yesterday was a little bit more to it. So when we think about what this market is doing in the longer time frame, we're putting in lower highs. We're putting in almost lower lows, just slightly lower low here. But we're not seeing a good upside auction beginning off of that low. It seems as though we're falling into kind of range-bound activity. If you just take a look at this, we've got some solid highs here, some solid lows. Just looking at the candle body range here, the upper candle body range, 1662.90. The lower candle body range, 16 to 32.40. So 62 and 32 seem like more important levels than anything we're going to see in the middle here. And we are in the middle. Take a look at the 30-minute chart. Okay, we can take this back. We've checked this. Naked point of control in the regular trading hours. Do we still have any kind of a gap here? It looks as though we might. Let's check this on the TPO chart. Nope, no gap. So we close the gap. That gap close could actually end up being resistance, because here we are right in the middle of Friday's range, and we talked about this yesterday about opening here was a potential area for repair. We never did quite get to the point, the high volume node here, which is the point of control, but we just did now. Is there potential for more repair lower? As long as we're outside of range here and inside value yesterday, I can look for opportunities inside this range from Friday. We got a couple of low volume nodes, high volume nodes. This gold market, which I said yesterday was in timeout, sitting in a chair with facing the corner and in trouble, still seems to be in trouble. I'm not going to be aggressive in looking for opportunities in gold without some kind of major change coming along. And of course, you want to keep your eye on the dollar. Speaking of keeping your eye on the dollar, here's the euro. Open interest continues to build. I think there's been a bit of a build in open interest in the euro and looking for some sort of change. Of course, we've got higher lows. We've got lower highs. We are coiling. We are hopefully building some energy for a decent trade opportunity. But I think we're still largely very short time frame controlled. All right. So, range bound. That's what I'm looking at. We had a doji yesterday. We're looking at a doji so far this morning. Here's the 30-minute chart. All right. Well, short covering yesterday, but an increase in open interest. There were buyers here yesterday. Do we have any overnight inventory? No. Are we outside range and value? No. Patience. Again, keep your eye on the dollar. I see my brother mentioning that the dollar and the 10-year rate have been dropping off the number. We're going to take a look at what the opportunity we might have here in the 10-year. We've been towing this line. If rates start to fall off and we start to get some shorts, which we know there's plenty of in this market, it has towed this line since, August. It's taken one look. We had a pushback off this weekly kickoff low on Friday, losing open interest, losing considerable open interest, I think, on Thursday. Yeah, we lost 66,000 coming off this low. So this was short covering. This was profit taking. This acceptance above this trend line could create another profit taking or short covering event. This is something I've been waiting for and something I've been looking for. We lost 1,100 in open interest yesterday on an attempt to push to the upside and back to the downside. I'm calling that inert. There was no real reason for anybody to get excited about that loss in open interest. Now, here's that trend line. We are solidly above it. We're opening above it, I think, for the first time pretty much ever. And this market is continuing to try and push away. I believe there is a gap that has been unfilled. And as long as we can't fill that gap, we're looking for opportunities to continue this market to the upside. I see a very juicy, tasty profit potential in this naked point of control. Again, what are we looking at points of control for? They're comfort levels. They're levels that a lot of people took trades at. People remember them. People focus on them, and if traders focus on them, they will drive price to it. I'm going to be interested to see how this plays out at the end of the day in the recap, because it won't surprise me to see this market reach up and touch this naked point of control today. Just a thought, just a hypothesis. I've been wrong before. The market loves to make a liar out of me. We'll have to see what happens here at the end of the day. And Nat gas. So we did have a short covering rally yesterday. A profit-taking event happened yesterday. Do we have a good low here? Is really the question. Well, we lost 6,500 in open interest yesterday, but 14,000 of that was the November contract. So we actually overall added a little bit of open interest off here. Is this new buying coming in off this low? It certainly seems to be, continuing this brief upside auction. How good is it doing? Well, it's still part of rollover, still hard to read volume, still hard to read open interest. And this last week's low, these swing lows here, this kind of a pivotal area, we were unable to take out last week's low. We are back above these swing lows. Take a look at the 30. So here's yesterday. Overall a loss in open interest. Or was it? Now we've got the market opening with the gap, coming to close the gap relatively quickly. We've got point of control / settlement here, which I believe is where our overnight inventory, which was long, may bring price to. So you may get an opportunity to get better trade location if this market pulls back into value from yesterday. Too early to know if this is really going to end up being a healthy auction. We have this point of control down here, a target for regular trading hours. We also have plenty to look at above as far as naked points of control are concerned as well. So be careful trading this market. Be careful. Hey, my spammer is back. I'm somebody. I have a spammer. David with a question. Do you think today trade execute on a 5-minute chart? I need to be trading full time, aim to hold until close or 2 to 3 days max? Or do you think a system of alerts and executing from a phone is viable, not scalping? Well, I can't really look at a 5-minute chart, David. It kind of gives me heart palpitations. If you're kind of fine tuning executions on a 5-minute chart and looking for bigger opportunities, I have no problem with that. Do you need to be trading all day long? I don't think you ever need to be trading all day long. Do you want to have a position on and walk away and manage it on your phone? I'm okay with that. I just don't recommend just trading outright on a phone and out watching those charts. I don't trust them that much. So if I do have a position and I have to move away, I have to go do something, I'll manage a trade. I'll watch the stop. I'll watch the profit target. I'll make sure that it gets managed properly, which usually means I'm going to screw it up. I don't think you have to trade all day, right? You don't have to trade all day, David. Oh my goodness. So I hope that's a good answer for you, David. You don't have to be trading all day full time. Sometimes you're actually better off walking away, right? So, all right, let's take our deep breath. We got Make Hogue Money coming up here in just a few minutes. Stay humble, grateful, and creative. Let's see if we can't find a good opportunity for us to make some money for old Hogue here. Bring your good trade ideas. If you're watching on YouTube, we'll keep an eye on the chat. If you're going to join us in Zoom, you'll be able to vote. We'll keep that eye on that chat as well. And let's see what we can do. If I don't see you for Make Hogue Money, get out there and profit today. Trade well. We are looking forward to your success. So get out there, trade well, and we'll see you in a couple of minutes.